Welcome to Markets Now. I'm Michelle Rook with John Heinberg with Total Farm Marketing. Grains are leaning mostly lower this morning. We started off just a little better in the cattle, but we're starting to fade there, at least in live cattle futures, and we're mixed in the hogs. And John, I want to start off talking a little bit about the corn market. Of course, we faded yesterday. We're seeing some follow-through selling today. Is it harvest pressure, or is it this South American weather forecast?
Combination of factors too. We had such a nice run up into Friday and before we reversed over. So we're seeing some technical follow through on the selling side of it. Harvest pressure continues to be a factor here too. We're 50%, 59%, almost 60% harvested on corn. That was where the market was anticipating, at least on the USDA crop progress numbers last night. So those things all kind of come into play. I do think we're at a pretty key level of price here in terms of the technical picture. 485 December, $5 on the March is kind of a spot that we've held, as we've tested these areas in the past. So far, it's holding this morning, so we'll have to see how the things kind of close out today. If we kind of have a way to find us turn back to positive here, then maybe we just going to see a market getting itself range bound with this being the bottom of that range.
Yeah, and we've been range bound for a little while here. The macros, the crude oil market, what's going on with the Middle East conflict, those things are all kind of spilling over too, aren't they?
Yeah, very much so. I think markets are just a little bit of uneasiness right now just because of what's going on the global scale. How far does things escalate? What are the impacts? So there's a lot of question marks out there, plus also just economic information in terms of interest rates, the debts, things going on here in the United States. This might be a window here as we get close to the end of the year that the market just stays a little bit more on the nervous side.
Yeah. What about the soybeans? We're back below $13 on the November. I know we had a reversal in meal yesterday, kind of tied to maybe some of these Argentina rains, but what are you seeing? What's pressing the market here right now?
I think harvest pressure is a big part of that. Again, that South American weather is something we are watching right now. There's not a lot of weather premium in this market. Obviously, things are a concern with the high temperatures and dryness in the central Brazil. So we'll have to see how that outweighs some of those Argentina rains. That may have been just a good reason for some price to come off yesterday. Again, some of the technical term from Friday just kind of saw that follow through. We look at soybean meal, though, it did break out December through new highs or through the trend line highs, retested that area and held it yesterday. Beans today too, holding key areas, $12.80, $13 November and January respectively. Got a little bit of talk about, China and Des Moines signing some ceremonial agreements for purchases, things like that. I'll just kind of maybe give this market a little support here, but harvest is near 80% done. So we're at that window now. We can, we'll get beans in the bin, beans are moving, and the market will need to see what it needs for supplies.
So you feel like the harvest low is probably in here then?
I felt pretty comfortable about that, a couple of weeks ago, as when we came off those lows with the rally off the October report. So yeah, at least at this time frame, it feels that way. U.S. supplies are still tight. Demand has improved nicely here in this window, which it should, because this is our shipping window. We saw that in the export inspections numbers yesterday. And we just need to see more routine business. But right now, the crush margins are good. They're bidding into this market. So there's competition for that tight U.S. bean supplies, at least here in the short term, which should help support this market.
Yeah. What about this wheat market? It seems like we can't put more than a one-day rally together. And, is it technical selling here that we're seeing, or is it still what you have talked about with other markets? Just demand. There's a lack of it.
That demand picture is obviously a big key. Now, there was some talk last week, China's sniffing for some more wheat. They may have some of their own weather issues with their planting progress, though, so far here this fall. So we'll have to watch if that continues to materialize. They did pick up some spring, Chicago wheat or SRW wheat here recently. We'll see if they add more to that pile. But the overall demand side of it's still a concern. Those Argentina rains, come into play. We'll talk of the Australian crop improving as well. So that all comes into that wheat market. The problem is with the wheat market, again, it's a global market. We got crops getting produced somewhere out there, and there's just an ample amount of supply at least available here, and it's just going to make it difficult to sustain rallies. But like corn, testing key support levels today in an uptrending market, we'll need to make sure they hold.
What about the Middle East conflict? There's been on and off talk about the impact that may have on global demand for wheat or, any commodities. But how do you see that playing out or impacting the market? What are we thinking right now, or what's the trade thinking?
More than likely, obviously, we're just watching the trade flows. If things do escalate there, obviously that could cause some issues. You got Egypt right around the, right nearby, a major buyer of global wheat, coming into play, and just obviously how things move. One of the bigger factors maybe in this wheat market is just some of the financial situations globally. Interest rates higher across the world makes it harder for some of these importers to get the financing. I think you're going to see demand for a lot of these grains stay a lot more hand to mouth, just because of the need and just the trend of the markets overall at this time frame because of the financial situation globally.
And the cattle market, wow, a wicked day yesterday, limit down move in some of the live cattle contracts. So we're under expanded limits this morning. How much chart damage did we do here, John, and can we recover from this?
Yeah, we did a lot of damage, obviously, going limit down or near limit down on the lives and the feeders yesterday. Obviously, some technical reaction to that cattle on feed report, and those numbers were not friendly. But again, it's about where we were in historical anticipation. Yes, they're higher than they were last year, but where were we compared to 2-3 years ago? Cattle numbers overall are still relatively tight. Biggest things that we're going to watch now in terms of at least the live cattle market is going to be a combination of the battle between the cash price, retail values, who has the leverage, the packers or the producers. Cash trade was $2 higher last week at 186. Choice carcasses still 304 this morning. And then we're in the window now. We're starting to think beef holiday rib trade. So typically we see retail values climb. I expect the market to be extremely volatile here, figuring out if we've got a bottom. Again, we're going to just have this battle between cash and futures. And right now there's going to be some disconnect just the way the money's flowing.
No doubt. What are you watching in terms of support here that needs to hold to not get the funds have already started to shed some of their long length. And, what number do they watch here to get out of some more?
I'm keeping an eye on the 200-day moving average underneath December. It's trading down another couple of dollars. I see the February contracts already tapped that this morning and held, so we'll have to watch that. It's always a swing point for me in some of these charts, as that 200-day moving average. I still got room down to the 170 level on December. I know it sounds like a long way away, but if you go look at long-term charts, we're still in an uptrend since 2020, but that's going to be the bottom area of the range. So we'll have to watch and see how the money wants to flow if they go test that. Again, the longer term picture still looks friendly in the cattle market given tight supplies. It's still just going to come down to the consumer demand and as well as where we are in terms of the money flow.
Yeah, no doubt. The macroeconomic picture, the geopolitical picture, it has spooked some of these funds out of that cattle market, hasn't it?
Yes, it has. And that's some of the things that's been concerning me over the last few weeks is just how this money flow is going to react. Hopefully the cattle market isn't an indicator of what we could see in some of the other markets if things still stay on the shaky side. So that's something I'm watching going forward. Again, what's just the overall sentiment of the marketplace? If we get a nice spin back, bounce V-bottom type recovery and cattle get back up into, again, those low 180s, I'd feel a little bit better about things, but at least right now it's going to be pretty shaky and volatile, especially with those expanded limits today. You can see a lot of aggressive money movement for realistically no reason other than the technical selling and buying in the next couple of days.
Yeah, that and emotions. What about this hog market? We just are barely off of contract lows, but do you think we can sustain a rally or a recovery here?
Right now it's about the supply picture. There's plenty of hogs out there at this time frame, and that's kind of keeping basically the leverage in charge of the packer, and they got kind of the control here. Don't like the current trend we've seen in cash markets as well as the retail side. Now we are holding on to the most recent lows, so this is going to be a spot that we can kind of dig our heels in here. But we do need to see some of those fundamentals start turning a little bit more friendly. I think it might be a little difficult for the hog market to do that. And if cattle stays in the volatile phase, it could be here as well. That's just going to make it hard for hogs to rally against a declining cattle market.
Yeah, no doubt. And cash and cutout values a little bit higher yesterday, but we've been on a pretty steep slide there, haven't we?
Yeah, we need to see some noticeable correction there and get a good trend going, in terms of that cash market. So like I said, maybe we're at a bottoming point here, sitting on these lows. It's like I said, it's going to be a key spot here, and maybe we can get some money flow moving this market higher.
Thanks for joining us. John Heinberg with Total Farm Marketing. That is Markets Now.